Yeah. Hey everyone, happy Friday. Sorry we're a little late, and then I know we posted, 5 o'clock, but we've just had all kinds of craziness going on today, so we apologize. Most people watch this after the live anyway, right. So. But we're here. We hope you had a great Thanksgiving. It's been a week since Thanksgiving. We skipped last week, obviously, but we hope you had an awesome Thanksgiving. Hey Johnny, thanks for joining. Sorry we're late. But we today... Life events are something that a lot of people don't even think to prepare for. Sometimes it's coming, but you live in this oblivion that, well, that's not going to happen to me. Mm-hmm. You're indestructible, right. And we've both been divorced, and I never thought it would happen to me. That's for sure. So, it's just prudent to just know, even if it's not for you, for someone else. So even if you're watching today, if you don't think you're going to go through divorce, that's great. I'm super happy for you.
Chances statistically are you'll know several people that do go through a divorce.
Right. So you can at least pass on some... Oh, wow. Thanks, Jim, for that wonderful note. Yeah, obviously Jim's not here again. But anyway, so... one life event that can be completely financially devastating, it can actually affect you the rest of your life, is divorce. So both being through divorce, both being in finance, actually Tamara has a background in tax too. Mm-hmm. So we're going to cover several things that you can do to prevent being in a financial disaster in divorce. And you don't want to be the one on the short end after your divorce. You say, oh my gosh, I got destroyed in my divorce.
Right.
Or, oh my gosh, my credit was destroyed in my divorce. Or I lost everything in my divorce. Whatever. We're going to give you specific strategies today to get ahead of that. So which one do you want to start with?
Why don't we start with debt and credit?
Right. Good. So
first of all, let me just say that before you even think of filing divorce or before you even start,
Jody's great.
Make sure that you run your credit report so you know exactly where you start credit-wise, and you know exactly all the debts that your name is on or that you may jointly have.
Yeah, because you may not even realize you are joint on something with your spouse. And again, yes, Ed, I know no divorce for you, obviously, but you can pass these tips off to other people or share the video. You can share this video if you like it or if you just think it's good information in general for people to know. So like our Nova Wealth Management page on Facebook. Check us out. I actually did really short videos on YouTube too, so if you know somebody about to go through a divorce, send them to our YouTube channel because they can catch it there too. But anyway, so going back to credit. So on your credit, hey Paul, no creditor cares if you are joint on a loan and then you're going through a divorce. They're not going to be like, oh, I'm so sorry to hear that. Right. Yeah, we'll just split up the account in two. They don't care, right?
Not at all.
So what they're going to do is they're going to say, okay, well, if it's a credit card, for example, you can say, well, give me my own credit card, give my to-be ex-spouse a credit card, and then we'll split the balance. They may do that, but they're going to make sure that you pass a credit check. They're going to give you an interest rate based on your own individual credit. They're going to ask you about income on your own. All these things start over. You're not a joint unit anymore. So that's one way to make sure that after your divorce, when you have all these joint accounts, that your ex-spouse doesn't destroy your credit. Right. Keep it in your control. As much as you can, get out of the joint accounts before the divorce. Any other joint... Oh, bank accounts. Why don't you talk about bank accounts for a second?
Before you, or during, whenever you and your spouse talk about, you need to make sure that any joint accounts you have, that you divide those up, because you don't want to leave joint monies in there. Either party could go in and drain those accounts.
It's as if it's their money.
Right.
So when you have joint owners on the account, if we're joint on the account,
either of us can go in.
Tamara, she can go in without me knowing and clear out all the money.
And close the account.
And close the account. Or add another owner to the account.
Yes. So
just
make sure
that
you have an inventory of all your joint accounts. assets or debt, and that you're watching those. And then also after the divorce, make sure that, as I said, check your credit, that you're checking it after, because your ex-spouse does have all your personal information.
Right.
So I've seen so many times where an ex-spouse has opened a new line of credit jointly.
You mean like identity theft, kind of?
Kind of, but it's they get desperate or upset.
Right.
You have someone that has all of your information, so just make sure that you're watching all of those things.
Maybe you put a credit alert. We talked about putting alerts and fraud and everything on your credit report. Maybe you do that if you know you're about to go through a divorce, or if you're suspicious of a divorce.
Right.
Maybe at least that's a way to alert yourself about your credit.
And protect yourself.
Right. So another debt that you might have jointly is a car or, a home. So two things that you can do. You can either refinance. Hey, Trisha, thanks for joining. You can either refinance that debt, because, again, they don't care you're going through a divorce.
No, they just want their money.
Right. So you can either refinance that debt, which would be smart of you, even if you're going to pay a little bump in rate increase, anything, just to not destroy your credit.
Mm-hmm.
Or pay it off. I mean, if you only have $5,000 left on the car loan, it might be worth it to take some of the assets you're splitting up in the divorce and use it to pay down joint debt. So there is no joint debt once you get out of the divorce, right? So a home, I know, like in my divorce, my home, like they wouldn't refinance, so you can sell off the assets. Like you got to do what you got to do to not leave joint assets moving forward outside of the divorce. So we can talk about assets too.
Mm-hmm.
So now, when you're splitting up assets, we talked a little bit about debt. But since we're talking about homes, when you're splitting up assets, you have to categorize the assets. Are you having issues here?
I issue, but I'm good.
Good. So when you have assets, when you're going through a divorce, you have to categorize the assets. Don't just go splitting up the assets based on dollar amounts. Hey, Heather, thanks for joining.
Right.
Nicely done.
Some assets are more liquid than other assets.
Right.
So you can divide up the home, but if you're not left with enough money to make those home payments, you could lose it. So you think you're getting out because you're going to get this nice big home and you get to keep the home. But if your spouse gets all the cash and you no longer can afford that payment, guess what? You're going to lose the home and the equity in it.
That's right. So there's 3 categories that I want you to break up the assets into, okay? First, the liquid assets. So any assets that can be liquidated or moved to cash, that's the term what liquidate means, within a week. So your cash accounts, your bank accounts, your money markets, your CDs, your investment accounts that are not retirement, they can all be liquidated to cash within a week. That's one category. Then you've got your income producing assets. So like real estate, investment property that produces income that you're renting out. So like a rental property. Or like a non-liquid asset like a REIT that pays you a good income, okay?
Or a limited partnership.
So then the final asset class is assets that you use. So then you've got assets that are use assets. You've got cars, you've got your home, you've got any furniture, you've got all this other assets. Don't split up your assets by saying, okay, well, he got the couch, so I guess I can get, $1,000 in cash. I hate to tell you, but that is not equal, Or if you're on the other end, I should have said it, if I get the couch and you get the cash.
I'll take the cash.
Right? That is not equal. So don't think just because you get something of value, it's not this. It's apples and oranges.
Because you're not going to be able to sell that couch for $1,000 in cash.
No. So, I mean, and it's a use asset. You're going to use it. So the goal is not to sell it anyway. It's going to use it. So to prevent yourself from getting in this pickle and afterwards in the divorce, you say, oh my gosh, I got nothing in my divorce. What was I thinking? I got nothing. And a lot of times an attorney or a mediator will help you. I actually didn't have an attorney in my divorce. Did you have an attorney in your divorce?
I did not. And several people do their divorces without attorneys.
Right. But even an attorney, that's not their job necessarily to make sure that 10 years down the road that you made the best decisions in your divorce. They're really just trying to get through the divorce. And they're thinking like, oh, well, that was split equally and that was split equally. Like, they're not necessarily thinking like a finance mind like us. Like, we're trying to think, like, what's going to benefit you 10 years down the road? We don't want you to look down the road and look back and be like, man, in that divorce, that really was a life changer.
Don't forget about retirement accounts.
Quadros?
Mm-hmm.
That's a great... Yeah, you get a free withdrawal. If you're splitting up a retirement account, So there's a qualified domestic relations order that can be drafted to split up a retirement account. So don't think that just because something, and I've actually heard people say, well, that's my retirement account, I can't split it.
Right.
You know, because that makes sense. Like, oh, that's in my individual name, that's my retirement account, I can't split it. That's with my company.
Right.
That's my current employer.
That's mine. Yes.
Yeah, that's mine.
Right.
No, you can split that. You get a qualified domestic relations order, or a QDRO, a QDRO, and you can actually split retirement assets. And when you do that, you get a free withdrawal where you will avoid the 10% normal IRS penalty when you take out money from a retirement asset. That's an awesome point.
Mm-hmm.
Yeah, so you can actually take out that penalty. That's one way to avoid that penalty if you need assets from the retirement accounts.
Right.
And then, so speaking of avoiding taxes and penalties, let's talk about taxes for a second. So alimony. So actually, this is a personal, not me, I did not get alimony, but somebody in my family.
Did you pay it?
I'm not going to comment on that. I'm not going to say anything. But anyway, those of you that know me know that. But the person very close to me got alimony and fought for a lot of alimony. And there was assets, but instead she wanted alimony and fought for alimony, and then afterwards realized it's taxable. Alimony is taxable, guys.
To the person receiving it.
To the person receiving it.
Mm-hmm.
So, and is it tax deductible to the person paying it?
It's
you have
not
to ask
tax,
the CPA.
Right.
I don't know.
It is tax deductible because
To
it
the
can't
person
be
paying
taxed
it.
twice. So the person paying it gets a tax deduction. The person receiving it's going to pay the income tax.
Right.
And child support is not. The person paying child support actually pays the income on that money before
Correct.
it goes to whoever's receiving
And
the
child support is not taxable.
Right.
So I guess if I'm trying to steer you in one direction or another, and if you're concerned about your tax situation, maybe your job is changing too because you're moving because of the divorce, whatever.
Right. Or you're going to be making more because of the divorce. You're going to have to
that.
go back to work, or you're going to.
Right. So alimony is taxable to you and can put you into the next higher marginal tax bracket that can change your taxes,
Mm-hmm.
and child support is not. So if I'm going to steer you in one direction, I would probably say in your negotiations go more towards the child support,
Right.
or more towards the assets, maybe less in alimony and more in assets.
Right.
Because that way you can determine the fate of your taxes. If you get the assets, that's your call, not somebody else's call on how much. Once you get the alimony, there's not a lot you can do, really, unless you go back to court to stop it all, that's going to be taxes. And I don't want to make it out to sound like alimony is a bad thing. Obviously, income is a good thing. I'm just saying, I happen to know someone very close to me that was upset at the fact that now she owes more taxes.
She had to pay taxes because she got alimony.
So she's like, well, a chunk of it doesn't even count because I just pay it all to taxes. It's like, well, yeah, you're getting the money.
Right. Someone's got to pay the taxes.
Someone's got to pay the taxes. So let's summarize real quick. So for those of you, we have quite a few people that just joined. So we're talking about divorce, and we're talking about how to not be on the short end of the stick if you're going through a divorce, how to not get super hurt when you're going through a divorce. So check your credit report. Pull your credit report, know the details of your credit report, and try to get out of all the joint accounts as much as possible. Don't leave your credit in the fate of your ex-spouse by leaving your name on a joint account. Either split up the credit debt, refinance the loan, or pay it off.
Pay it off and close them.
It's worth it to get less in assets if you can use those assets to pay down debt and be rid of it. And we said when you're splitting up, I have one more thing I just remembered too. When you're splitting up assets, categorize them so that you're not getting an asset that is not the same as what you were splitting up. It's going to end up hurting you in the long run. Categorize them into cash assets, income producing assets, and use assets that you use. And then we talked about just taxes, as you just heard. Alimony is taxable, child support is not. So the last thing I wanted to talk about is on debt, when you're splitting up debt. If you do decide to split up debt, if you're splitting up two loans, like let's say you have multiple investment properties. So we have obviously clients with wealthy, they have multiple properties, so maybe they're splitting up properties. Don't compare debt by just the balance.
No, you need to look at the interest you're paying, the terms.
Bingo. That's where I was going.
Very good point.
Yeah. So, look at, in the term, like you said, the maturity date over time. Mm-hmm. So maybe one only has 5 years left and maybe one is a 25-year loan.
Right. You're going to be paying so much more.
You'll be paying so much more money over the long run. So don't be stuck. Pull out an app, on any financial app on your phone. you can pull up a financial calculator, punch in the balance, the maturity date
The rate.
of the loan, the rate, and it'll tell you the total balance over time, what you're paying.
Right.
And then compare the two debts.
Right.
That's how you compare the two debts. Unless there's a plan to pay it off or something in the next few years, you can put that into play. But if there is not, you got to compare all the money that's being paid over time.
Right.
Not just, oh, well, this payment and this payment are about the same.
Right.
Oh, this balance and this balance are about the same.
the same.
Don't use just payments. Don't use just balance. Look
Right.
at what you're paying over the life of the loan.
Mm-hmm.
Awesome.
Very good.
Anything else?
Not that I can
I don't think
of.
so. I have several attorneys that we work with. So if for any reason you need like a tax attorney or even an accountant, we have plenty of professionals that we work with. So if you need any resources, please feel free to reach out to us. Obviously, we don't do divorce.
We don't want you to get divorced.
And we don't want you to get
if
divorced.
you do, we're here for you.
We're here for you. This is life, right? So again, like us on Facebook. Share this if you think it could help somebody, even share it privately via Messenger if just help somebody out. This can literally change people's lives over years. I mean, we're talking thousands of dollars, and credit ruin. It doesn't ever leave your credit.
No, it
You don't want to
doesn't.
be thinking about your divorce and your ex-spouse your whole life.
Yeah, in 15 years. Dang it.
Yes, right. So, do what you got to do. Check out our YouTube channel for the 3 short videos that we did on the divorce as well. And then follow us on Twitter at Nova Wealth Management, MGMT. You guys have an awesome weekend. Thanks for joining, and we'll see you next week.
Bye-bye.
I love my wife.